station of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Pete in Long Island. Hey, Pete, what's going on?
Hey, Tom. Good evening, and I want to give you a big thank you. Last night I called for your advice, and you gave me such wonderful and correct information. If you remember, I was short 3 gold stocks,
yes.
NEM, AU, and AEM.
Right.
And based on your opinion, you've been right on the mark with this. Boy, it was wonderful, Tom. I got to be honest with you. It's unbelievable what you're doing for your radio listeners.
Well, I appreciate the call, man. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night. Let's take a look at one of our quotes. This is by Natalie Goldberg. Follow what you love, and it'll take you where you want to go. Think with your heart, folks, not your head. Market-wise, let's take a look at it out here. We had the Dow Industrials down 137, NASDAQ off 28, S&P's off 14, gold contract up $1.10, trading at $1,294 an ounce. Silver up 5 cents at $19.40 an ounce. Platinum flat at $1,470 an ounce. Copper down 2 pennies at $3.15 a pound. Light sweet crude flat at 102.44 a barrel. Bonds, ever any bunnies? They just don't stop. You get the 10-year up 7 ticks at 125.30. 30-year up 8 ticks at 137.07. King dollar up 47 ticks, trading at 80.09. The euro down 10 at 136, and the yen trading at 101.29. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay, so check it out. We get the cash S&P right now at 1874. We come down 10 points. We do 635 million versus the 584 yesterday. So, bottom line, you move lower, get the expansion of volume. What is that setting up? Well, it sets up now. The S&P, folks, is the only index thus far that hasn't fell apart. As I go through these today, I'm going to show you something, though, that we'll walk you through step by step. So, the cash S&P, the benchmark is February 5th. That's 1737. We're at 1874, so the benchmark is way down. Your first level that I suspect we're going to run after is 1814, 36. The second one is at February 5th level. If you take this, not that I use these, okay, but bottom line, there's plenty of folks that like the 200-day moving averages, the 50-day moving averages. We're laying right at it, folks. The 50-day moving average, we got down today to 1868.14. We're laying, we got the 50-day moving average is at 1867. As I bring you through this, you're going to see why you want to pay attention to this, because the bulls, on a continual basis, even on CNBC this morning, was just cracking me up. They had one after another on the air continually. No, we're not going to have a 10% correction. Well, guess what? The small caps is already down over 10%, okay? Bottom line is there's every type of excuse possible that you're not going to have a correction. It's like, well, so what, did everything change and never have a correction again in your life? Bottom line, as we go through this, you're going to see what we have happening. We go over to the Dow Industrials. What do you have with the Dow Industrials? Dow is giving it up. Giving it up, baby. Down 137 bucks. You're at 16,374. Not that that's a huge deal, but guess what? It broke the 50. You broke the 50. We're at 16,000. The benchmark, your first benchmark is at 16,000. That's down 374. Your larger benchmark, however, is 15,440. That's where this market wants to go. NASDAQ Composite. What do you have with the Composite? Composite also had an expansion of volume. Yesterday we went up with 1.5 billion. You're down with 1.7 today. You can really basically say, hey, you got a sideways move in the NASDAQ. You know, you're down 28 bucks, but realistically that's a sideways move. The NASDAQ had already taken out its 50-day moving average, a couple weeks ago. The 200 is laying right underneath us right now. Now, the small caps. Now, check this out. The small caps are just a mess, folks. I mean a mess. So, small caps come down today, $16. The small caps, folks, we are at 1098. The benchmark that it already got into, with volume, by the way, is 1082. This baby had an expansion of volume once again today. If we go take a look at the IWM and inside that correlation, this is what you have with the IWM. IWM got a bounce yesterday. If you want to see how anemic this is, IWM bounced yesterday with 35 million shares. Well, guess what? You go south today with 82 million shares. Your last swing point, which was last Wednesday, had 75 million shares. So what you have is this. You have an expansion of volume before you're even at the swing low. The small caps, folks, are going to blow away the swing low. IWM is at 109. That thing's going to be running down to the 90 mark. The IWM is below its 50 and its 200. It's a mess. Big time mess. Gold contract. Let's take a look at gold. Now, the gold contract out here today, rejected lower price, had lighter volume. If you haven't checked out John Logan's videos on our website at TFNN.com, folks, come over to our website right now. If you're over there, check out the video. It's an awesome video. He walks you through each and every day. Today he did gold. Really nice heads up, though, big time. Bottom line, what do you have out here? Well, we did 122,000 contracts. You rejected lower price. You had lighter volume. And this has been teetering. It's a trip because the S&P wants to go south. It looks to me that, guess what? Gold and silver looks like it's going to hold. I think gold wants to run to $13.28. Silver wants to run to the $20 level. I want to see the sign of strength pretty quickly. But bottom line, held nice today, pulled back, had lighter volume, rejected lower price, all of the above. That's saying it wants to run up to that swing point. Bonds. Bonds are the ever-ready bunny here. There's no two ways about it. What do we do in bonds today? You're up 7 ticks. You did 1.1 million contracts in the 10-year. That's after the 10-year already broke above all its consolidation with 2 million shares, 2 million contracts. We're at this 125.30. What you have, the yield right now is 2.511. You're going to see this yield get under 2.5 before the end of this week. The 30-year bond, same setup on the 30-year bond we had with the 30-year bond. She did 354,000 contracts, just refuses to get the lower price. 30-year, we're at 137. She wants to run to the 141. And the 141 area, folks, is ice. So we'll see how it handles ice. But that's where that baby wants to go. King Dollar is basically making her way. She's at 80.10. And she's making her way up to this 80.77. I suspect on a longer basis she wants to go to this 81.40 level. Our phone number is 877-927-6648. After the close out here, let's take a look at it. We got Intuit, which is the software company, accounting software. That closed at $76.84. She's trading at $73.51. She's getting hammered. And guess what? She has a high volume low. That's amazing. So 69.02. This is a high volume low. Let me pull this back a little, and then we'll give you the numbers on this. Man, this is a mind blower. I'll tell you, folks, you get stocks with a high volume low, get to stop and get out, because they're all going after these high volume lows, and what you're going to see is one after the other go after it. Intuit, $69 is a high volume low. We had hit that low February 14th, the week of February 14th, 14 million shares. Then guess what? She goes from a price point of 69 up to 82 with 8 million shares. Check it out. So you're down at 14 million. You're up at 8 million. They sold the retail customer bill of goods. Guess what? You're right back down there. Number-wise, what do we have number-wise? This is what we have. Okay. Revenue is $2.39 billion. The estimate, they made their estimate. The estimate is 2.38. They made 2.39. That's top line. Bottom line was $350. I made $353. Guess what? They're not believing it. I see what's going on. What they're saying, so they made these numbers this third quarter. Fourth quarter, the estimate was 12 cents. They think they're going to come in with 6 to 8 cents. They're going to get smoked. CRM, Salesforce.com. Salesforce.com closed at $52.89. She is trading out at $53.95, so she's up $1. And she's already got smoked. She's already down from $66. Numbers on Salesforce go like this. The estimate earnings per share was 10 cents. They made 11 cents. Up a penny. Bottom line, she's already got smoked, and she's going to be getting to a lower price. You stay right there, folks. This is Tom O'Brien. This is TFNN. We'll be coming right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom Tom takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had Staples down $1.60, a GM off $1.18. Let's see, TJ Maxx was down $4.45. If we go over and take a look at TJ Maxx and see what is happening in that equity. Oh, man, talk about getting blown away. Okay, so we get a monster ABC down. Let me pull this back a little bit. You want to see these high volume lows too, folks, how they get tested. Bottom line is that we're in a market right now. If you have equities that have a high volume low, get a stop in quick, okay? Because these things are coming down fast and furious. So TJ Maxx had the high volume low, and it doesn't mean that the test means, folks, that it's going to go test it. And the test specifically, it can come down there and blow the thing away, just like TJ Maxx did today. So it had a high volume low at $55.82. That high volume low was February 5th. So watch what it does. Has 7.6 million. Well, guess what? Like the market, it went from $55, goes all the way up to $62. At $62, there's 3 million shares. Oh, really? 3 million versus your downtown 6, right? See you later. They do 17 million today, blow away that high volume low, and guess what it's doing? It's going after a gap that's opened at $50, and right now you're at 53. That's on the daily. You put this on the weekly, and it's an absolute mess. It's been, a field day on the way up, no doubt. TJ went from $9 up to $64. Well, guess what? This is disgusting, actually. This thing can get hammered down to $23. That's sick. It should have some support at 28. And you're at 53. This is serious business, folks. Serious business. DKS, Dick's Sporting Goods. Another one. You want to see this little baby down? I guess it was down 20% today. Okay, down 956. This came out with numbers. Evidently, it didn't make its numbers. Let's just do the technicals on it first. So, technically, what you had is this. Same deal. High volume low, screaming, that's out here. Now, this one here, folks, this is a tough one. I want to walk through this slow because it's subtle what's going on with this one. But what you had is this. On the daily basis, okay, we had a high volume low at $46. And, yesterday the stock is trading out at 53. Okay? Now I put this on a weekly. Okay? So when you put it on a weekly, the setup on a weekly is pretty clean, meaning that we had this high volume, couple high volume lows. But the biggest one that sticks out like a sore thumb is 45.67. Okay? So the week of August of 2013, you're at 45.67. You have 19 million shares traded. Then it makes a high with 6 million shares traded. Guess what? That's where it wants to go. But this is the kicker. Now watch this. And this one here. The reason I really want to go over it so much is that this was a tough one if you're looking at a monthly basis, and this is why. So on a monthly basis, what you had is like, okay, the stock doesn't look that bad up to $51. At $51, it has volume of 51 million. That's pretty wild. 51 million, $51, okay? Then it makes a high with 21 million shares. Now, that high was $58.37. Now, watch what it did. The next month, it actually went higher, but then it had volume coming off that high. And this is a tough one, but I want to walk you through it just in case you have something like this in the future. And this equity here, the way that is set up, you really, on a monthly basis, you really didn't know, okay, that, okay, does this really want to get down into the 45.67? So what do you do about that? Well, what you want to do is just put a stop in. That's the way you have to deal with this, And right now, though, now it's basically told its tail. See, the daily was saying you had a high volume low. The weekly was saying you had a high volume low. The monthly really wasn't. It was that close. But you don't see many equities that are basically set up like this. Staples, SPLS, same deal. Staples is dead meat, folks. Staples looks to me like We talked about this a long time ago, but Staples looks like it's going to go out of business. Staples come down $1.50, 38 million shares. She has that high volume low of $11.16. Now, that's on the daily, but watch what happens on the monthly is that this has the monthly high volume low at 1057. If you break that 1057, then guess what? You get a nice ABC structure on the way down. Your A point is $23. Your B point is 10. You get 13 bucks. Your C point is 17. That gives you a $4 stock. That's possible. And we'll know. You break that swing point, guess what? That's where that baby wants to go. In fact, the more I just put this back in 2000, it has another high volume low at 650. And, yeah, this thing wants to go to $4. Let's go to Lewis in Cape Canaveral. Hey, Lewis, what's going on?
Yeah, good. WPRT, it's almost at that 1350 again. What do you think of it?
So this is Westport Innovations. They produce natural gas engines and fuel systems.
You talked about it a while ago. I just see it getting back
you got to let it go all the way down. So
it's gonna get there.
Yeah, what you have is this, and this is why you want to let these things test. Now, Westport Innovations, folks, has been in a downtrend for years. It had a huge sign of strength on the 2nd of May. Stock goes from a price point of $12.71 up to $16.25. It does it with 7.1 million shares. You're pulling back with 600,000. You want to let it get to the bottom of that range, folks. The bottom of that range is 1350. This is a nice setup, though. I like this setup. Let me put this on a weekly. Okay, so now, this is really cool, actually. So the reason that you really like this setup, so watch what you have here, too. The last time that we had big volume on the way down, now this is an equity, just as the market had gone to higher highs, lighter volume, right? But you pull back down to where the volume is, and that's what's going on in the market right now. Westport Innovations, WPRT, goes under its lows with lighter volume, and when you start turning, folks, meaning it takes a turn in the marketplace and starts going topside, what you do is you look at the last place that it had volume on the way down. Now, in this case, that volume on the way down is $21.93. The $21.93 is left over from June of, oh my God, 2 years ago. Okay? 2 years ago. So, the risk reward goes like this. It pulls into the bottom of 1265. You put your stop right underneath it. A dead cat bounce will get you 21.93. That's how that baby shakes out. You know, if you end up getting another sign of strength, like we had the past 2 weeks, well, guess what? You can get a lot more than that level. But at this particular point, the 21.93 is resistance on the way topside. What you had inside the Dow Industrials today, at one point the Dow Industrials, the only Dow stocks, well, Disney, the only Dow stocks that were up. You know, Home Depot was up, Procter & Gamble was up, and Disney was up. Bottom line, Dow has a roll. NASDAQ has a roll. Small caps are smoked. You stay right there, folks. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And folks, if you'd like to test my daily newsletter, Market Insights, the way you do that, you come over to our website at TFNN, you go into newsletters, trading newsletters, Market Insights. You can test drive it 2 weeks absolutely free. Some of the Dow stocks, this is what we have. Caterpillar, they took apart today. It was down $3.89. You had Boeing off $1.77. Big Blue was down $2.14. 3M was off $1.44. GM was down $1.18. Walmart was down 92. United Technologies down 192. We go over and we take a look at Caterpillar first. What you're going to see with Caterpillar is this. So, 6.5 hours, take back a month and a half of trading. The elevator down, folks, has only one speed. It's supersonic. Expect Expansion of volume, 9.2 million. When we take a look, we put this back first on just a yearly basis. What you're going to see is this. We are at 101.56. 94.69 is the first stop. And, you know, that's not that bad. It's $25 off its high. That's where that baby wants to go. We go over to Boeing. We take a look at Boeing. Boeing had already taken its first leg down, folks, and hadn't come back since then. That was in January. January it went from 144 down to 118. Has some juice down at that 118 level. Does a nice counter-trend bounce. When you take a look at Boeing, Boeing looks to me like a monster ABC structure on the way down. You had made a high on a weekly basis with 17 million. You come down with 44 million. Then you made a high last week with 15 million. So the correlation is really clear. 15 million was going into the 46 million. You still have the high volume low at 44 million. Bottom line, this thing wants to basically run into about $98. If you break 98, then there's going to be big problems. Then you're dealing with a $76 price point. Big Blue. Big Blue's been having a tough time for quite a while. Big Blue is down $2 today. And now remember something with Big Blue. Big Blue is spending huge amounts of cash buying their stock back. They've been buying, for quite a while right now. Of course, the high is 210. We're at 184. She breaks lower today. Has some, not big juice. 3 million shares versus 4 million. That's not the end of the world. What it is for Big Blue, is this, though. What do you think you have? You have two high volume lows. Those lows are generated at 172. Now, what you also have is this. Big Blue looks to me like it's a very large ABC structure on the way down that has been consolidating since October. And if that's what we're talking here, it's pretty intense because your A point is the high at 215. Your B point is the 173, so you get $40. And your C point is 199, so you're talking about 160. A to B equals C to D. When we take a look at this on a longer basis, the 160 is going to be pretty easy to basically get into. The reason being is that at 157 on a monthly basis, guess what's sticking out? You have big volume. Okay? If, in fact, that's where we go and you do get an expansion of volume, then you're going to see these one by one have large problems in the marketplace. What you have happened is this. The small caps have come down. They're breaking B points. They're doing it with volume, all of the above. NASDAQ has rolled, okay, but has a lot further to go. Dow Industrials has now rolled, and it's going to be where do you hide? Right now, they're still hiding in the S&P. You'll see how this S&P rolls, because inside the S&P, you got to remember something. 19% is the information technology. Then comes the financials, and then the energy sector. So if we go over to the XLF first, the XLF, folks, financials, has a high volume low at 2050. We're at 2173. That 2050 is February swing point. That's the benchmark. Also has a high volume low at the April swing point. Both of those levels, I suspect we're going to get into. If we go over and take a look at J.P. Morgan Chase, J.P. Morgan, she's building cause to basically, she's below the 5430, which is a trading range. She's below that. She has some juice behind the move. We'll see just when the market really starts paying attention to the amount of fines and the amount of manipulation and fraud and everything else that has taken place inside the banking structure. The thing that's amazing is that you had Credit Suisse yesterday. They're pleading guilty to a criminal charge. Out here today, the J.P. Morgan Chase and who else? There's a bunch of others that are basically, I'm not sure if they're pleading guilty yet. And this is all about the basically manipulating currencies over in Europe. Oh, here it is. Okay, so yeah, this is this morning. Okay, so the European Commission said today that it informed credit lawyer HSBC and J.P. Morgan for its reasons for believing they rigged interest rate benchmark critical to the global financial markets. So J.P. Morgan, following a probe, the Commission said it had now told the three of a preliminary review that they have breached the European Union antitrust rules by colluding to influence the pricing of interest rate derivatives nominated in the euro currency. Bottom line, folks, it says one after the other after the other. Those financials are going south. Energy. We take a look at the energy market, the XLE. We'll have the XLE. That hasn't rolled yet. The XLE right now, you're at 93.42. We did come off the high last week with some juice. The XLE will have to really get into 92.59 with an expansion of volume to get into a lower price. So when we talk about infinite information technology, what are we talking? Well, what you have inside information technology, folks, a lot of the healthcare companies, the telecommunication companies, if we start with Verizon, we take a look at Verizon, that's at $48 right now. Not a bad setup. What you have is that, let me pull this back a bit. So it's going to be interesting to see how these babies actually do roll. When I take a look at Verizon, it's like, man, you're at $48, $45, is where it could pull back to. And that does make sense because Verizon is still turning around and has a 4.3% yield at this price. At $45 would be a better price. If we look at Marbell's at $35.50. She's paying 5%. We pull this back a bit. It's like, okay, so can she pull back to 31? Yeah, she can. Nothing heavy. What you do have is this. Inside that information technology, you also have the information technologies from healthcare. A few of those have already broke down. That's, we'll see how many more end up breaking down. That is the breakdown that the S&P is waiting for. That's what it really comes down to. If we go over to the biotechs, we take a look at the IBB. That is what started this whole deal on the way down. She gave up $3 today, 1.3 million shares. This is subtle, though, inside the IBB, because what you had is this. We had an expansion of volume on the way down. Slight expansion, but percentage-wise, a big expansion. Yesterday, we went higher with 900,000. Today, you go low at 1.3 million. So you're talking about 400,000 off of the 90. Bottom line, that's a big expansion of volume. IBB also has a high volume low at 207. Let's go to Brent in California. Hey, Brent, what's going on?
I'm doing well, Tom. How are you doing?
Good, man. Good to hear from you. What have you been up to?
I haven't talked to you for a while.
Yeah. What are we going to look at?
Medtronics, MDT.
Okay, let's take a look at it. We get Medtronic. This is, they develop therapeutic and diagnostic medical products, and this is exactly what I was just talking about. This is part of the information technology inside the S&P. The low is 49, the high is 62. She's trading at 59.41 right now. Okay, so what are we looking to do here?
I'm actually have some puts, $60 puts on it.
Okay.
It looked like there was a couple of decent down volume days around one at 56 and one around 53 that haven't been tested yet.
There is. No, there's no doubt. And I'm glad you called about this one, too, because this is what's holding up the S&P right now, which is amazing. Now, what we did here is this. This had no volume at 62. It was trading at 62 April 4th. Runs down to April 14th, runs down to 55. See the top of that, which is 58.36. That's what stopped that today. But you did have an expansion of volume. It's 6.8, but you're going into that 10.4. You're going to have to build some cars here, but it does want to run down to that $54. I can see what you're looking at. So how many months are you out, Brent?
Out to June.
Okay, good. That's good. That's what you need. You're going to need some more juice. You can see that, but that thing is sticking out like a sore thumb, man. And
Thank you, Tom.
Okay, man. Have a great one. Have a safe one. It's Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. We had the Dow Industrials down 137. NASDAQ off 28. S&Ps are off 14. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mob BI in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Tom O'Brien. Welcome back, folks. We had the Dow finish off $137, Nasdaq down 28, S&P's down 13. Let's go overseas. We'll start in the UK. We take a look at the UK out here today. So she came down $42. Not a lot of action. We did volume out here. I'll get it in. So where is she heading? That's the bottom line. So we're at 68.02. So she's heading to 67.66. The DAX in Germany, we take a look at the DAX. What the DAX did, she tried to get the higher price, failed at higher price. I suspect the DAX is going to try to get into this area about 95.35, which is only $100 down. We'll see what kind of expansion of volume that you have as we get into that area. Now, what you got to wrap your head around, folks, is this, is that we're in summer trading already, May 20th, okay? Mondays and Fridays, you're going to have light volume. Tuesday, Wednesday, and Thursday, you're going to have volume. So if you're a bull, that's when you want the market to go topside. If you're a bear, that's when you want to go downtown. That's how this thing shakes out. And what you're going to see is you're going to see more volatility Tuesday, Wednesday, and Thursday in the marketplaces. We're coming up this weekend to Memorial Day weekend. So what you're going to see two separate issues. Excuse me, folks. As we get into tomorrow, you got the Fed minutes coming out from the last meeting. That'll throw, in the morning, what that will do, that'll kind of keep things flat. Start putting volatility into the marketplace, 115. You can expect volatility, and I expect, we'll see how this baby's trading out in the morning, but more than likely what you're going to see is that there's going to be downward pressure again. Thursday, you'll have some high volatility, good action. Friday, the market is going to be really slow Friday when I expect what you're going to see as we go down Friday, get some kind of a small bounce. By the time Wall Street will be closing down about 11:30 by Friday. 11:30, that's when you're going to see things slow down pretty dramatically. The reason, of course, you get the long Memorial Day weekend. We're closed Monday. Coming in next week, then you got to get some action. As we go through the summer, something you really want to wrap your head around is this, is that June is not a bad month. Normally June is, not bad. The market likes to move higher into July 4th, no matter how low we are. Those bounces, and, my take is that the S&P is coming down 150 points and the baby's going to roll. By then, the small caps are going to be really toast. But bottom line, as we start making our way through the summer, what I expect you'll see going into July 4th, you're going to get some kind of small bounce. Then, folks, you better be prepared, because what happens in the summer, in July, I've seen way too many, high volatile markets come in fast and furious. Is there a rhyme to the reason to it? Not really. But what does happen is that when we talk about, you got the Ukraine over there, but what you also have over here, okay, is Thailand, okay? They're having some big problems in Thailand, okay? They started martial law last night, and it's not so much that it's in Thailand. What it has to do with is how money is moving out of countries because of problems. When the Asian contagion started in '98, I think it started in the Philippines. It started a small economy, okay? Went from one economy to the next economy to the next economy, and what you had happen is this, and this is how it normally shakes out. It's not the country that it started in. What it is, it's one of our own fund managers in the U.S. that is a monster fund that has made a bet there that goes sour, and what does that do? That rolls the markets here because one bet that has gone so bad, meaning a leveraged bet, goes bad, then they start selling off other pieces. That's what basically rolls the market. It's not the actual, whatever the problem or failure is in that country. That's how most of the major downdrafts happen inside the marketplace. So you want to be prepared for. Well, let's put it this way: you just want to think ahead. If you think ahead in the marketplace and think about, okay, what are the good things, what are the bad things, where can they go? You're not going to get slapped in the back of the head. Get your stops in, folks. If you learned anything, take a look at this small cap bottom line. That already fell apart. NASDAQ is close. See, what is also happening here, and this is what's so sneaky, is that, the NASDAQ were at 4,000. And, needless to say, that's off 4,300. But it's not that bad. I mean, that's not that bad, really. What you have, though, is guess what? At the last low that was generated out here on the 15th of April, well, that's a high volume low. So the NASDAQ very well could just be a very large ABC down. 43.71 is your A, and 39.46 is your B. That's $430. 430 off the 41.77, right? So what? 437 for you're talking about a 3,600 NASDAQ. Now, we take this back and we take a look at a 3,600 NASDAQ. Let's see where we are. Yeah, see, that's no man's land. 3,600 NASDAQ, folks, is October 13th. Yeah, that's where we're going, by the way. This October, that is the next swing point, and that's what the small cap has already generated, meaning that's the next benchmark. October 2013 is the benchmark you want to keep your eye on, because that's where the NASDAQ is projected to go right now. Small caps are screaming they want to go there. Now, what the problem is with that level is that there's nothing to stop it there because of the way the market went up. The market went straight up from November of 2012 until 3 months ago. When that happens, there's no floors in the middle, folks. We'll see how these floors get generated on the way down. There'll be some bounces, but the key is how do they get generated on the way down? Will they bounce there, stay there for 2 or 3 months? We'll see. Most of the time what you have is that it's the elevator down without a stop. If we go take a look at GDXJ for one of the Tigers in the Tigers Den, this is the Gold Miners Vectors Junior Miners, and this is like the rest of these gold, the XAU, the HUI. They're teetering. We want to see signs of strength. Just when I brought up how the small caps, how the NASDAQ's coming down, this is teetering at these levels. We do not want to. You don't want to see this GDX break the 33.77, or you're going to be landing at 28.95 in a heartbeat. And that's how they all are, by the way. You stay right there, folks. We'll come right back. Don't forget, if you like to test my daily newsletter, go to TFNN, go to newsletters, trading newsletters, market insights. You stay right there, folks. Come right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
This is TFNN.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Rich in Taunton, Mass. Hey, Rich, what's going on?
I just want to let you know that I listen to a bunch of radio shows and financial related, and TFNN has the best stuff, most interesting, even if you don't understand everything about it. It's really good stuff.
Thank you so much, man. I appreciate that. I love the part about not understanding it. No, I know it's a different language. I mean, well, the way I speak is a different language anyway.
Yeah.
Oh, listen, man, I appreciate you listening out there. All you folks, thank you so much, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our quotes. This is from Duke Ellington. The Duke. A believer is an optimist who thinks of tomorrow. Market-wise, let's take a look at it out here. We had the Dow Industrials down 137, NASDAQ off 28, S&P's off 13. All the indices, folks, down on expanded volume. Gold contract, flat at 1,294. What you had with gold is this. Gold rejected lower price, had lighter volume. Gold wants to run up to this 1328 area. Silver, rejected lower price, had lighter volume at $19.40. I suspect she wants to try to run to the 20 area. Platinum, 1,469, flat market. Copper was off 2 pennies at $3.15 a pound. Light sweet crude, flat at 102.44. We go over to that oil market. What we have with oil is this. The contract right now is, it did 40,000 contracts today, which is anemic, by the way, folks, okay? Anemic. She's coming into 324,000 contracts. It's going to be interesting to see how and when this baby gives it up. Because the way that she is, actually, hold it, no, let me go to the end contract. So the end contract did 239,000 contracts. Oh, interesting. Oh, she's going to go to the high first. Okay. Oh, what a trip. Okay, so we're at 102.90. Your swing point is 103.11. She's going to go after the swing point. She's going after the swing point. You remember, oil turns every month. That's how this works. So that's when we just went from one contract to the other. Now, what does get interesting, ooh, look at this. Oh, this could get, okay. So inside the oil market, folks, okay, this very well, and one of our targets, he had sent me something over, not in the oil market, but about, I think it was the S&P or maybe the NASDAQ. I forget what one it was. This is a while ago. But there's a pattern out there that is called 3 drives to the top. And this is setting up really nice to basically do that. Your first high in the oil market, 102.27, that was generated March 3rd. You go from 102.27, then you give it up and you get down to $95. Next high, 103.11. What do you do then? Bottom line, run down to 93. Now the symmetry is really cool here. And it's hard to get both. It's hard to get the 3 drives to the top and symmetry simultaneously. And if that's what you get, what I'd suggest you do is that you want to take 120%, 127% actually of this move over the top of 103.11, and that's where this probably will go. And well, that's a butterfly. That's more than likely what will end up happening here. This is a nice setup, though. 3 drives to the top, folks, is a pattern that you have to have patience in an extraordinary way for. But you let that baby blow topside, and then you just fire away. You make sure you put your stop right on the other side of the 1.27. Bond market. Bonds continue to get to higher price, folks. Bonds just absolutely refuse to give it up. We have the 10-year. That was up 7 ticks today. Not that it was a lot, but she's hanging at the highs. She won't back off of the highs. This is after last week. She had a monster move, 2 million contracts on the way up. If you want to see the correlation inside the TLT, what you have is the TLT is this. This is the 20-year plus. TLD has a high volume high now at 114.41. Broke topside with 12 million shares versus 12 million. So she broke topside, had enough volume. Pulled back And this is where the correlation comes, that she's confirming that she wants to go higher. So she goes higher with 12.6 million. She comes back yesterday with 7.4 million. Bottom line, she wants higher price. Now, when you take the TLT and you put this on a longer term basis, what we have on a monthly is the ICE. We were talking about on the 30-year. The 30-year bond wants to go to 141. That's ICE. That can be the end of the move. You know, we'll see if that's the end of the move. And that's still a lot higher. It's 4.5 points higher than we are. On the TLT, what we have is this. The bottom of the range that it's trying to get into right now is 113.17. Now, we made it up to 114.41 last week, and we gave it up. How we get into that range is going to be important, meaning they'll give you a heads up on the actual contracts themselves if, in fact, they want to go to the highs. Thus far, on a monthly basis, what we've done is that we've done 114 million shares. She's coming into 208 million. So what we're going to need, let's see, 10, 6 is 60. It's not bad. The way this is set up right now is you're running a run rate of about 170 million versus 208. So you still don't have enough, but you absolutely have to expect that you'd be building cars in order to get into that area, because that area is going to be tough to get into. And if you get into that area, if bonds get into the area that we're talking about in the TLT, meaning from 113, let's say the TLT gets into 115, then let me tell you something. The high is game, which is 132, and that will be just an absolute amazing deal if that's the case. You know, when you look around here, watch this. I'm going to pull up the... If you happen to be watching Tiger TV, what you have here is this. This is... I'm going to change the texture of these as we're talking, but this is what I want you to understand about what bonds are paying around the world, because that's all we're talking about competition-wise. This here, I'm gonna change this. I'll change this. Well, I'll keep it at a 10-year first, so you can see what the yields are. Our 10-year right now is 2.5. Okay, you can get down to Brazil and get 4.1, but guess what? The real's getting killed. Okay, so you lose all your money. You can go to the United Kingdom, you get 2.6. That's around the same. You can give your money to France and get 1.8. Really, 1.8? Germany, 1.3. Italy, who is going default, is paying 3.2. So do you really want basically, 0.7% more to give it to Italy? This is the real kicker. Do you want to go to Greece, who's still broke, and get 6.6? Japan, they're paying 0.5%. So check this out. Japan's paying 0.5%, folks, for 10 years. 10 years. 10 years. 10 years. Australia, 3.7. New Zealand, 4.2. Now, that's on the 10-year. We take this... I'll put this on a 30-year. When you take a look at the 30-year, this is what you have. You can either basically lend money to the U.S. Treasury at 3.3. If you want to go to Canada, they're going to give you less money, 2.8. You go to Brazil, they give you 5. You go to United Kingdom, you're going to get the same as us, 3.2. France is 2.8. Germany's 2.8. Italy's 4.3. You can see the way this structure is, the way it's set up, why the amount of money is going into bonds. You got to take the whole picture, the whole world. Dollar. Let's take a look. Well, here, let's go to gold. We're going to have our man John Logan on in a bit. What we have with gold is this. No, John's on tomorrow. That's right. Tomorrow, yeah, that's right. Okay, and folks, if you haven't test drove John, well, first off, John puts a video each and every trading day right at TFNN on the right-hand side. It's free. Go check it out, folks. Today he had gold on it. Awesome video as to where the signal box is, where the support is, where the resistance is. It was all there this morning, and it's still there. Gold, what gold did out here today, she rejected lower price, had lighter volume. We've had a couple signs of strength in gold since the downdraft that was created on April 15th. We need another one, folks, and we need it right now. I really like what happened in the gold market today, in the silver market today. The reason being, we go pull up silver. What you're going to see with silver, too, they both held when the S&P was going south and you had the dollar going north. So what we had inside the texture of the marketplace today, gold held its own, silver held its own, dollar was going up. I want to see us get out of here, though, because the longer that we hang at these lows, it's dangerous. It's dangerous right where we are. XAU, HUI, they're in a dangerous spot right now. Doesn't mean you don't get. And what it is specifically is that the sellers are gone, but we don't have the buyers, and we need the buyers. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. We had the Dow Industrials closed down 137. NASDAQ was off 28. S&P's off 13.5. We're going to be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finished down 137. NASDAQ was off 28. S&Ps were off 12.5. And as we do each and every Tuesday at 20 past the second hour, we get our man, Mr. Andy Hecht. And don't forget, folks, right at TFNN every Tuesday, Thursday, 3 to 4 Eastern Standard Time. Andy has an outstanding program all about commodities. As you come over to our website at TFNN, you're going to see right on the front page, energy opportunities during the summer of 2014. Andy's going to be doing a workshop. That workshop comprises of a Saturday morning. It's going to be June 7th, 9:30 to 11 o'clock in the morning. It's only $99. It's going to be the best $99, folks, you ever spent. As you sign up for that workshop, you will immediately get Andy's 7-page report. So you come over to our website, you sign up, $99. Great workshop, June 7th. Now, if you can't make the workshop live, what you will have is that it'll be on your page for 30 full days, okay? So check it out right on the front page of TFNN.com. And, of course, when you do sign up, you're going to get that 7-page right up ASAP. Andy Hecht, what's going on?
What's up, Tom?
How you doing, man?
I'm doing good. I'm watching hockey.
Oh, that's a beautiful thing.
We got the Rangers are up 2-0 on the Canadiens, who put away your Bruins. But it's our turn. It's our turn this year.
Oh, let's go. Listen, I'll cheer for you guys. Okay, man, that's good. Now I get someone to cheer for. Okay.
Exactly. No, I watched the game last night. It was awesome.
Okay.
It was awesome. But everything's good. Today, by the way, I did my 100th show.
Wow.
Isn't that crazy how fast time goes?
That blows my...
You know, I mean, I kind of write notes for the show, and I number each set of notes. And
that is so cool.
I was doing it this morning. I said, wow, it's 100.
Man.
That's good. That's a mile. That's a milestone.
That's huge, man.
It's a milestone.
I like it.
Yeah. So there's a lot going on. Let's talk a little about gold and silver.
Yeah.
You know, it's like, I would say that trading gold and silver right now is like watching paint dry.
Yeah.
But I agree with you. I agree with John Logan. These markets are going to blast.
Yeah, I'll tell you, man. It's like heavy watching this thing. It's like, oh, man.
Oh, I know. You got to have patience.
Yeah.
You got to have patience, but they are holding very well. It is, I always say, it's like a rubber band that you keep pulling and pulling and pulling. When it snaps, it is fast and furious. I don't know where it's going to come from, when it's going to come, but it's coming soon. I don't think we have to wait too much longer.
Well, I like what it did today. What I don't like inside that market, you know, is like we're in the middle of no man's land. You know what I mean?
Well, I agree with that.
But hey, listen, I like what happened out here today, man. They could have killed this thing today. There's no doubt.
Oh, absolutely. And if it was meant to go down, they would have.
Yeah, that's a great point.
Go ahead.
I heard you, on the show, on your outstanding show, talking about oil. And here, so check this out, Andy, because when believe me, this morning I wanted to go short oil so bad, and the Nadex platform.
Oh, you gotta wait. You gotta wait a little bit.
I know that. I was watching a trade, and it's okay, man. I'm gonna wait, but I think I figured it out this afternoon. So when we take a look at this, this looks to me like it's 3 drives to the top. So what happens with a deal like this is that it'll blow through the last high. See, we had that first high, 102.27, March 3rd. Symmetrically, the second one, 103. The third one's going to be probably 105 or something, man.
104.50 to 105. Yeah, that's what I'm looking for. I think that's a scale up, sale up there. Yeah. There's two things. Fundamentally, there's two things battling the crude market. The thing is that when the inventories come out, inventories at Cushing are dropping.
Okay.
And that's because of the whole pipeline network.
Yeah.
But inventories overall are the highest that they've been in decades.
Yes.
But the delivery point for WTI is Cushing.
Right.
So
that's all that matters.
Well, it is all that matters, yes. However, you can get it to Cushing very quickly if need be.
Right.
So, you know what? At this point, listen, I am still bearish on oil. I'd say the next $2 to $5 is up. The next $10 to $20 is down.
Yeah, no,
that's my view.
It's like it's a tough one here. It's a tough one.
It's very tough. I'm flat. I have no position.
You know, I am too, but I'm really cognizant of it because, you know, if the oil market croaks and the gold and silver market can croak just as easy. You know what I'm saying? So okay, you know, it's like, is that where we're going? Are we taking it?
Well, the equity markets are going to croak. That's for sure.
Well, yeah, they've already started, right? I mean, the small caps is toast. That's under the, you know, 50, 200. You know.
NASDAQ led that thing down. Hey, let's talk a little bit about El Nino.
El Nino, okay.
Right?
Yeah.
Australia remains on El Nino watch on expectations that the weather pattern that brings drought to Asia Pacific and heavier than usual rains to South America will probably develop by August this year. So it's not going to have a lot to do with the grains here, but let me tell you what it's going to have a lot to do with. It's going to roil the soft markets. It could cause some really, really big problems in places like the Ivory Coast, Ghana,
cocoa,
Brazil, Thailand, Malaysia, cocoa, coffee, sugar.
Okay.
Cocoa, coffee, sugar. Now, cocoa made a really nice comeback. We were down at 28.49, and I kept on saying, scale down, buy.
Yeah.
We're up at 29.65. We're headed right back up to the highs in cocoa. That's a demand-based rally, but now we could have some supply issues. So that's interesting. Sugar's a dog. I mean, this thing doesn't get out of its own way. But, we get an El Nino. We get some problems with the crop like we had in the Brazilian drought. That glut will disappear very quickly. It'll turn into a deficit. Sugar will roar past 20 cents. And coffee, great support below 180. I expect coffee to go back above $2. So that is what El Nino can do to some of these markets.
Well, you know, did you see, folks, if you missed this thing, I mean, it was pretty severe. It was somewhere in Europe, right, that absolutely got wiped out over the weekend. I mean, you know, we had that big war. Remember the war in the 90s? You know, you're talking about they got in 3 days, they got basically a year's worth of rain. And
right.
I mean, the cities are wiped out. I mean, like
right. I mean, and you know, when you're a farmer, you want rain, but you don't want rain like that.
Yeah, no way.
You know what? And you don't want drought. I mean, you know, it's you'll probably have a pretty good growing season for the grains here this year. That's the way it's shaping up.
Okay.
But you know, a couple of other things that I just wanted to mention quickly. Cattle making new all-time highs.
Yes.
Hogs still under some pressure. I'm kind of looking at long hog, short cattle here. That's what I'm kind of looking at. The other interesting thing, platinum group metals, platinum and palladium, both. Johnson Matthey came out today, said the deficits are going to be bigger in these metals than expected.
That's big.
So I expect platinum and palladium to do very well. And finally, natural gas. Now, I'm not going to give away the ghost here, but I did. You know, I put together this 7-page report as a prelude to my workshop on June 7th. And I found out some very interesting things about natural gas. I shot it over to you.
You stay right there, Andy. I won't give it away either. Dow Industrials finished down 137. NASDAQ off 28. S&P's down 14. You stay right there, folks. Our man, Mr. Andy Heck, is coming right back. And listen, folks, you can come over to our website at TFNN. You'll see right on the front page Andy's webinar. You can sign up right here, right now. I'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks, to talk about our man, Mr. Andy Hecht. And as you're over at our website at TFNN, folks, you're going to see new webinar, Energy Opportunities During the Summer of 2014. Andy's going to be doing a workshop, webinar, worldwide. We have great technology. No matter where you are in the world, folks, you can get this. It's going to be a Saturday morning, June 7th, 9:30 to 11. It's only $99. As soon as you sign up for that workshop, you're going to get Andy's special 7-page report right here, right now. If you can't make it live, you don't have to worry. It's going to be on your page for 30 days. You can go over it as many times as you like. We're talking with our man, Mr. Andy Hecht, right now. So
Tom, you know, I was going to say to you, I was listening to your first segment, and I think you gave the listeners a really good picture of the interest rate environment.
Yes.
And why U.S. bonds at such high levels can really move higher. And it also feeds into why some commodity markets can really move higher. These low interest rates
Great point.
are not going away.
Right.
And quite frankly, you know, I thought it was particularly good when you gave the example of rates in Brazil as compared to the United States. Where would you rather have your money?
Oh, totally, man. The reals got killed, folks. There's no doubt, man. I mean, it's amazing when you really start looking at it. I mean, it's like, really?
I mean, and the rates in Greece, in Italy, in Ireland, in Portugal.
Right.
I have to tell you, these countries teeter on the brink of bankruptcy.
Yeah.
And in the early 1980s, their paper would be paying 150%. Now what is it paying, 4%?
Right. Right. And
It's amazing.
We know that nothing has changed, okay, in Greece and Italy. Absolutely nothing, okay? And when I say nothing's changed, folks, I'm just going back the last 3 or 4 years, meaning that because it was more transparent of how much debt they had basically then. And, you know, it's transparent to a certain point, but the bottom line, as things get rolled over, you know, they basically can look a little bit better.
Right. So let's take it one step further. You know, the bottom line is that back in 1980, this paper that's backed by the full faith and credit of government had a lot more full faith in it than it does today. It doesn't yield very much today, this full faith and credit.
No,
right?
There's no doubt. There's no doubt.
So, you know, that's why, you know, this feeds into, this is a very bullish argument for gold and silver, in my opinion.
Well, it looks to me, no, and I agree. It looks to me, and this is going to be really unique if this is how this thing shakes down, folks, because, see, every correction that you have in the broad market, you still have to watch out, you know, gold, silver, man. I mean, that can get croaked, too, because if everyone goes broke, everyone's broke, and, you know, that's lower prices. But the way that this is being set up right now, it looks that foreign folks are turning around, staying in the gold market, the silver market. The dollar wants to go higher. One of the most impressive things today that we had is that gold and silver stayed higher. And check this out, folks. I'm going to go from a technical to a fundamental now. Well, I'm actually going to do a technomental. You got me going, man. It's a beautiful thing.
I like it.
Okay, and this is what it is. So after China, folks, okay, Thailand is the second largest buyer and owner of gold basically in Asia, not India. India is first, okay?
Right.
Thailand last year, because Thailand has been having so many problems, only imported 1/2 the amount of gold that they imported the prior year. Right now, they're running, you know, like they're not buying a lot of gold. It's the same thing that's happening. And when I was looking at that, I'm saying to myself, okay, gold's still holding. They're having huge problems. That is a real positive, man. That is
I think it's a real positive.
It's a real positive. You know, and if you've ever been to Thailand, folks, you know, they wear gold, and just like the Indians wear gold, and they're amazing.
They sell little gold foils to go and put on the Buddha to pay your respects.
Yeah, no, I listen.
Right. Yeah, I've been there many times.
And you know what's so cool, folks? If you ever go over there, this is what's really so cool, is that they sell gold jewelry just by the ounce. So
by the weight, right.
Yeah.
Same as they do in Dubai in the Middle East.
Which is dynamite, man, because you're getting a great piece of gold and you're not paying for the art.
Right, you don't pay for the artisan craft.
Isn't that amazing, man?
It is amazing.
That blows my mind, man. And they're so talented, folks. It's amazing.
Well, labor is also very cheap.
No, it is. It is.
Yeah,
so it's amazing.
But you know, low interest rates feeds. I mean, this whole gold rally is really based, you know, has been based on very, very low interest rates for a long time. And I don't see these interest rates. I mean, I know a lot of pundits are calling for interest rates to go much higher. I just don't see it because we're not alone in a vacuum. When you compare it to paper that is, you know, junk, basically. I mean, Brazilian government debt, in my opinion, is junk bonds, as is Greek or Portuguese or Spanish government bonds. When you compare our interest rates to theirs, there's not enough of a spread. So the loss of income by holding gold is de minimis compared to what it used to be when interest rates were 10%.
Yes, it is. Yes, it is. There's no doubt about that.
It all feeds into the same thing.
And when you look at the context of the amount of debt that all sovereign nations actually have, folks, okay, it absolutely makes no sense that why are they going to raise the rates?
Well, of course, it's mind-blowing. They have a vested interest in keeping them low. How fast would our deficits climb if interest rates here went to 4%? Calculated, it's mind-blowing.
Okay, so now we'll put the whipped cream on it, folks. And what the whipped cream is all the baby boomers. So picture this. The baby boomers, they talk about the new kids in the block, meaning that they just are never looking for the market to basically not crash because they're so used to it. I mean, anyone that, is by 30, 35 years old, the bottom line is that, from 2000 to now, you've seen 3 crashes, right? So, But the baby boomers, folks, okay, the bottom line is that, if they stayed in the market, they basically have most of their money back right now. The key is going to be, okay, are they going to get conservative and stay in the market and basically lose their money again? Or are they going to get more conservative and say, okay, listen, I'll take 2.5%, I'll take 4% a year. That, folks, that amount of money that is going to be more conservative in the next 10 to 15 years is huge. I just think that's the way it's going, man.
2008 did a lot to negate the concept of buy and hold.
I agree. And what happens also is people just want their money back. It's like, okay, I'll make 2.5%, and I'm going to get my money back.
And there's so many other factors here, Tom. 20 years ago, 30 years ago, when you wanted to sell your stocks, you had to get on the phone and call your broker and sell your stocks. Now you open your account, you hit a button, you're out. It's much easier for people to trade.
Yeah, it is.
And for these, for the younger people to trade and to, if they get nervous, to get out. So, it's a technology, interest rates. There's a lot of things at work here in these markets.
No, there is. And, we'll watch it shake out. So
we certainly will.
Give us like a little hint of what your workshop's about.
Okay, well, I'm going to go through energy. First of all, the reason that I want to have this workshop, and I'm having this workshop, is that I think that the summer of 2014 is shaping up to be one of the most interesting summers we've seen in a long time in the world of energy, particularly oil products, and natural gas.
Okay.
And just as a little hint, I did some work over the weekend on natural gas, and I found some very, very interesting tidbits, which I put in that special report.
Yes.
Just comparing inventories over, the past 12 years to where they are now and what they did when they were, at average levels. And it's very, very eye-opening.
Nice. Cool, man.
So we'll have some trade recommendations. We'll go through some fundamentals, some technicals, and I've told everyone. I told them on my show today. Anyone who signs up, please, if you have anything specific, a stock, an ETF, anything in the energy sector you want me to really go over, just email me at andy@tfnn.com, and I will certainly include it in this hour-and-a-half webinar, which we're going to do on a Saturday morning at 9:30 a.m. Eastern Time, 6:30 my time. So you get to come. You have the whole day after it, and I think it'll be great. We won't have the distraction of the markets, and we'll be able to focus in on kind of a medium-term view to the summer, and where there's some real explosive upside.
And what Andy does, folks, which is really cool, okay, so when we talk commodities, of course, you're looking at the futures markets. But because there's so many ETNs and ETFs right now that trade off the futures, folks, you can just be in the equity markets, okay? And he does the correlation. He's going to show you the correlation fundamentally, technically, and that's what the whole technomental theory, which Andy started, is all about, okay? So you can come over to our website at TFNN. You can see it right on the front page. It's only $99, June 7th, 9:30 to 11. Hit that button. You get the workshop. You get the paper right here, right now, and you'll have a blast at the web shop at the webinar. Andy, you have a great one, a safe one. Hey, listen, Vegas, is it 100 degrees yet?
Oh, it was. It was 102.
Oh, man.
That's not bad. 120 is bad.
Oh, man, I love it.
Take
okay,
care,
man.
Tom.
Have a great one. Have a safe one. Thanks,
Talk
Andy.
to you Thursday.
You stay right there, folks. Come right back.
Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. You had United Technologies down $1.92. Walmart was off 92 cents. You had Marbell off 88. Honeywell was down $1. Big Blue was off 211. Let's go over to United Technologies. We'll take a look at some of the larger caps, because inside the Dow Industrials today, the only three that were up, folks, you had Home Depot, Procter & Gamble, and Disney. United Technologies was down $1.92. She got back inside the lower range. So United Technologies has just come down from $1.20. The top of that range into the lower range is $1.15. Now she's in $1.15. Guess what? High volume lows. These high volume lows are all over the place. It's just a mind blower, actually. Where they were generated, okay, is that October of 2013, February 5th. In the case of United Technologies, she has a high volume low that's hanging out here from February of 2014. That high volume low is at 107. So we're at 113, 107's game. You'll see whether we come down with some juice behind the move. You come down with juice behind the move, and then you're going to be dealing with a whole another aspect. What we did have out here today is that you had Caterpillar come down with some juice off the highs. Let's go over to Walmart. Walmart is basically still at 75.69. We did come down with monster volume when they come out with their numbers 2 days ago. A gap down with 5.6 million. When we take a look at Walmart on a longer-term basis, what you have, we've been in this consolidation going all the way back from October of 2012. It's pretty amazing, actually, looking at it. The way Walmart is set up right now, it looks to me like it's going to basically try to break the swing low that is out there, and that swing low also is a high volume low. It's $71.51. So we'll see how that shakes out. The longer, okay, so the way market's set up, so picture this. When you talk about market movements, you have accumulation at lows with light volume. You have markup with big volume. You have distribution at highs with low volume. You have markdown with big volume. That's how the market does, folks, over and over and over again. What I've learned is this. The longer that you have made a top with light volume, the more dangerous it is, meaning the length of time that you have gone sideways. What tends to happen is this. Bottoms, folks, most of the time get made very quickly. When I say get made very quickly, you come into a fast bottom. You know, stocks get killed, indices got killed, whatever that is. You come in for a fast bottom. You bounce off the fast bottom. Then what ends up happening, it might take a year or 2 years building that low out of the bottom before you can get to higher price. Okay? That's kind of just how lows come in. Highs are a different ballgame. What highs do is that highs hang up there, hang up there, hang up there. Now, the longer that they hang up there, what has happened is this, on a fundamental basis, is that all the big operators, a little by little, getting out of the stock, saying, oh, thank you for taking my stock. Thank you. And then what ends up happening, as the downdraft starts, meaning as you come off the highs, volume expands, there's no buyers, because the natural buyers are the funds. And this is what the difference is, just so you can wrap your head around this a little. What a natural buyer is a mutual fund, a hedge fund, any type of fund, states, pensions, any type of fund where inside the prospectus it's mandated that they have to own so many equities. So that's a natural buyer. It's a natural buyer in the context that as money comes out of either paychecks, or money comes out of state coffers, or money comes out of foundations, guess what? They have to go in the market and buy. That's a natural buyer. As that natural buyer is moving out of equities that they think have done well, and they're moving into other equities, and what they normally would do is this, is that, let's say they get, a sector that's really done really well. That sector's done really well. Other sectors that have gone lower, they're going to move out of one sector and into another sector. See, they have to be long. This is the thing that's really wild about the context of prospectus and funds in general. So if they have to be long, and they can't lose a lot of money very quickly, because if they do, everyone pulls their money out, and as everyone's pulling their money out, guess what? It accelerates it down. So they do lose money very quickly. But the fact of the matter is, when they do, they lose everything because it gets pulled out so quick. So what they try to do is on a continual basis, as they're peeling profits off at highs, they're trying to get into something else, and that's what, folks talk about sector rotation and all of this. The bottom line is that they can buy many dogs, and many dogs can get out even further. But fundamentally, that's what they try to do. When we look at the marketplace out here, we have a lot of equities that have been hanging at highs for a long period of time. When those start rolling, I'm telling you, get out of the way, because the roll on an equity that has had been at a high price for a long period of time with light volume is problematic. And what you'll see when these babies do roll off the highs, they're fast, they're furious, and there's no stop in between. We just looked at United Technologies. Actually, I want to go over to United Technologies one more time, because you know what you do have here? Also, I think United Technologies. See, our big tech companies made the big military industrial companies made a huge mistake. And what it was, one of the mistakes, was letting the Russian companies basically do the booster rockets. I think they're R-20s. And what has happened is that let me just see if United Technologies is one of them. I know Boeing is. United Technologies reached a supply agreement. Okay, I'll have to do more research on this. But the bottom line, just to finish that story up, the bottom line is that the R-20, I believe it's the R-20, what you do have is that Russia has stopped sales of that to those companies, period. And this is where Elon Musk comes in. He's been trying to basically get a company up and going to sell to the government. They haven't bit yet. They're going to bite, folks. They're going to bite because the bottom line is that Boeing, I think it's Boeing and Lockheed, actually, they claim that they have enough booster rockets for 2 years. Well, 2 years is not enough time. That's it. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it. Fly with it. Thanks for being here, folks. Have a great night, safe night. We look forward to speaking to you right here tomorrow. Go get them, folks.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
This is TFNN.